afternoon, everybody. This is Todd Mitchell. Hope everyone had an absolute fantastic Memorial Day weekend. It is Tuesday, the 31st of May. We're looking at the E-Mini S&P 500 futures contract, and I had a few trades today, but in my other account, my Interactive Brokers account. And by the way, you can in fact day trade futures if you want, your IRA account. And my Interactive Brokers account, my main account, is a retirement account where I trade very, very actively, swing trade stocks, ETFs, do the options, and day trade the futures. So just if you had any questions, and I do get questions quite often, can you trade your IRA account? I guess it just depends on who you have an account with, but Interactive Brokers, you can absolutely trade your IRA. And so I did all of my trading inside that account today, not my trade station as you can see right here, but I want to point out a couple really, really good trades today that I think you can learn a little bit from, and hopefully you'll watch my video series that I started today to teach you a little about the S&Ps and how to trade those profitably. And I think the last couple of weeks I've shown you a lot of really good trades in E-minis, trading ones and twos, onesies and twosies, to prove that with a small amount of money you don't have to trade a lot of contracts. You can trade 1 and 2 contracts and make money. So today, this horizontal line right here represents the opening, the 9:30 New York opening. Okay. Now remember, we're getting close to the all-time highs in the S&Ps. Okay. 2105.5, I believe, is the all-time high. And so over the weekend, Friday night and Monday, the market traded, and we tested those highs. Didn't quite test them, but got close to that high, 21. Okay, so when the market opened up today, right here, market traded down, traded up to 2101 even. Look at how many bars hit 2100 even without taking out that number right in here. So this right in here, when you had like the 4th or 5th one, so 2101.5, 2101.5, 2101.5. If you look at the window, you'll see the high of the bars. I'm pointing to 2101.5, 2101.5. A very, very low risk trade on something like this is entering the market. Here, let me put a white horizontal line where you'd be looking to go short. And I rarely do any type of breakout trades during the day trading the E-minis, but when you have something like this where your risk is so limited, you just have to do it. Okay, so look at these lows. Okay, so you got a boxy formation. You'll agree with me. You got 1, 2, 3, 4. You had 5 bars that had the same high of 2101.5, okay? And then you had 2100, 2101.5, 2101.5. When the market broke down through 2100, even to the downside, to 2099.75, that's where my short was, okay? My short was at right where the white horizontal line is, 2099.75, with a buy stop. Once that was hit on this bar, right, was 2 points above that, 2101.75. So I was risking 2 points. Okay, so my R equals 2 points. I was risking only 2 points here, and on this, I was looking to make 4 points. Okay, so if I'm risking 2, you simply subtract, right? And this trade we're going short, so you're going to subtract 4 ticks down from 2099.75. So 4 down from that is what? Right? Do the math. 4 full points, which is $200 per contract, right? Would be 2095.75. 95.75. Look at that. Look at where the market went to. 5.5. Okay? So that was a good trade. So this first trade, we were looking for a 2-to-1 reward to risk. So we were risking 2, right? Risk was 2 points. Profit target, right, was right here. So that was a good first trade of the day, okay? Very, very spelled out stop loss. It was carved in stone. Once the market takes out that low, your stop loss, your catastrophic stop is above those highs by 1 tick, and that was 2 points. So in the way I managed that trade is once we closed and then traded down through the low of the bar that got us short, we moved that stop down to 1 tick above the 50% of that mid-range of that break. So my stop was moved literally within a full minute of getting in that trade. Okay, that was the first trade of the day. That was good for 4 points. Okay, didn't do anything in here, nothing in here. When the market rallied up to this point in here, that was another good selling opportunity. Okay, did not buy it, didn't sell in here, didn't do anything in here. Market broke above that high, but it got to a spot where we had a nice setup to the downside, and that was a good trade for a few points there. Didn't do anything else. So this trade was actually good for 3 points to the downside there. Didn't do anything else until the end of the day, where it really set up a little after 3 o'clock. Market tested the low. We had every reason in the world to be getting long here, and let me just show you with my white horizontals what my risk on this trade was. Very, very spelled out, very exact. Okay, so the market came down, took out the low by only 50 cents. The low of the day was 2,086.5. Market went down to 86 even. Gave me an inside vertical bar, and you're going to learn more about this in the next video, I think, free video. Okay, my buy was at 87.5 as it took out the high of this inside vertical bar, 87.5. My stop was 85 3/4. Okay, so again, my buy stop was at 87.5 with the sell stop right below the low of the day, 85 3/4. I was risking only a 0.75. That's what my risk was. Okay, and on this trade, minimum profit target on this trade is 2 times that. So what are we looking at? 3.5 points to the upside, 3.5 points up from 87.5, 88, 89, 90, 91 even. And look at this. Look at where the market rallied up to. 91 1/4 before backing and filling a little bit and then coming right back up. So again, trading multiple contracts, you could have been shooting for that 2 to 1, which was right up in here. Again, let's move it. 91 even. So again, the trade is here. Stop here. First profit target right in here. So this was a really, really good trading day today. So hopefully you learned a little something. If you've got any questions, let me know. Have a great one. I'll be back with you tomorrow.